Hi guys, this is Ravi and you are listening to me on the Nifty BN channel. It's Sunday, April 25th. Time again for another technical outlook video where we would be looking at some technical charts and try to identify trading opportunities for the coming week. As always, let's use option chain analysis, support and resistance zones, and trend lines to do just this. But let's do some post-market analysis first. The Nifty on Friday witnessed an intraday movement of about 187.85 points. It closed 64.8 points or 0.45% lower at 14,341.35. Among the sectoral indices, only Nifty Financial Services 2550, Nifty Media, and Nifty PSU Bank ended in the green, bucking the trend. NTPC and Powergrid were the top gainers in the Nifty 50 index. They added over 3% each. And Muthoot Finance, Cadila Healthcare, and ICICI Prudential Life Insurance were the top gainers in the Nifty Next 50 index. They added over 4% each. Among all securities, Bal Pharma was the top gainer, while KDDL Limited was the top loser. SAIL, Tata Motors, State Bank of India, ICICI Bank, Cadila Healthcare, Tata Steel, and BPCL were among the most active securities by both volume and value. Punjab National Bank was the topmost active security by volume, while Tata Steel was the topmost active security by value. GP Petroleums, TPL Plastic, Jubilant Industries, Kotari Petrochemicals, and Deep Energy Resources were among the top volume gainers. Kalyan Jewellers India Limited, the Investment Trust of India Limited, and Gem Networks Limited were among the prominent stocks that have touched their 52-week lows on NSE. Hindustan Unilever Limited, ICICI Lombard GIC, and Petronet LNG were the F&O stocks that had more than 60% delivery volumes. High delivery volumes suggest large buying interest. ICICI Bank Limited and Reliance Industries were among the most active futures buy contracts. Both had more than 48,000 contracts. Want to meet like-minded traders and discuss option strategies, adjustments and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community. Now to the FII-DII data analysis. Let's start with the retail investors. Retail investors were bearish on both stocks and indices. They added 480 net shorts in index futures and 11,238 net shorts in stock futures. They also added a huge number of shorts in index call options and a slightly less number of shorts in index put options. They were net bearish on stock options too, as they added shorts in stock call options and covered some shorts in stock put options. Now to domestic institutional investors. The DIIs were bearish on the markets. They added net short positions in index futures, stock futures, and stock call options. Now to the key players, the FIIs. Foreign institutional investors added net shorts in index futures but net longs in stock futures. They were bullish on index options as they added net shorts in index call options and covered shorts in index put options. They were slightly bearish on stock options though, as they added meager amount of shorts in stock call options but huge amount of shorts in stock put options. And finally to pros. The pros were bullish on stock options and bearish on index options. They added net longs in index futures and net shorts in stock futures. The pros added short positions in index call options but covered a significant number of short positions in index put options. They were bullish on stock options though, as they added longs in stock call options and shorts in stock put options. Now to the cash market. Foreign institutional investors sold Indian stocks worth more than rupees 1360.76 crore, while domestic institutional investors bought shares worth more than rupees 1695.59 crore on April 23rd, as per provisional data available on NSE. This has been the trend over the last 4 sessions. The month to date data shows a similar trend, with FII selling rupees 8236.62 crore worth of equities and DIS buying rupees 7689.45 crore worth of equities. Now to the technical analysis. All charts are courtesy of Dr. Om Prakash Deshmukh, a senior member of our Telegram group, and I appreciate his time and effort on this exercise greatly. Let's start with the Nifty 50 index. We are looking at the hourly chart of the Nifty 50 index. The frontline index Nifty tested the support range of 14,150 to 14,250 multiple times in the past week. It also tested the falling resistance trendline at least twice. Only a close above the recent high of 14,521 levels would get some strength back for the index. And if it closes below the recent low of 14,150 levels, then it will trigger fresh selling pressure. A 700-point movement can be expected on a breakout on either side. Traders might want to keep a stop below 14,150 for all long positions. Now to Nifty Bank. Again, we are looking at the hourly chart. The overall structure of Nifty Bank looks positive compared to Nifty. The banking index has formed a triple bottom pattern near the crucial support range of 30,500 to 31,000. It also managed to break above the falling resistance trendline. An expansion on the upside will resume on a strong close above the recent high of 32,300 levels. But bearishness will resume only on a close below the recent low of 30,400 levels. IRCTC, short for Indian Railway Catering and Tourism Corporation, formed a bullish engulfing pattern on the weekly chart. This pattern has formed exactly at a retest at a breakout level, which makes it even more significant. One can go long at the high of the weekly candle of 1717.90 with a stop of the weekly candle low of 15,058.1 for an upside target of 2000 to 2100. Now to option chain analysis. Let's look at the option chain of the April 29th monthly expiry. Let's start with Nifty. Maximum put open interest is at 14,000, followed by 13,000 strike and followed by 13,500 strike, while maximum call open interest is at 15,000, followed by 14,800 strike and followed by 14,500 strike. The change in open interest is the highest at the 14,000 strike on the put side and at the 15,000 strike on the call side. Now to Bank Nifty. Maximum put open interest is at 29,000, followed by 31,000 strike and followed by 30,000 strike, while maximum call open interest is at 33,000, followed by 34,000 strike and followed by 32,000 strike. The change in open interest is the highest at the 29,000 strike on the put side and at the 33,000 strike on the call side. As said earlier, 14,150 for Nifty and 30,500 for Bank Nifty are crucial levels. A breach of these levels shall dictate a new trend for the Indian benchmark indices. The markets are expected to remain highly volatile due to monthly expiry and rising COVID cases and deaths. So, in the current scenario, one needs to make a cautious approach to the markets. Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram, and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab. So do not forget to check that from time to time.